Good morning, everyone, and thank you very much for joining me. This is the morning market review. My name is Russell Shaw. I'm a senior market specialist at FXCM. Today is the 16th of January 2024. It's just gone 7:40 GMT. Just going to go ahead, bring up some disclaimers here. We're going to start off with a high risk investment warning. I'll keep this on screen for a few moments. Just have a read through that, please. Okay, and here is our market commentaries disclaimer. And let's go ahead and take a look at the real rate. Just go ahead and share that tab for you. All right, just before we get into the analysis of the real rate, just some wings of change. You don't have to do anything. Can you see the stream? Let me know. Just want to make sure you can see the stream. Let's just go through some. News. So, in terms of interest rates coming out of the ECB, Joachim Nagel joined a growing group of colleagues who are open to considering lowering interest rates this summer. We'll take a look at the real rate. That's the US real rate, but generally rates tend to move globally. Others, including Governing Council member Robert Holtzman's, pushed back on the idea. Houthi militants hit a US-owned commercial vessel with an anti-ship ballistic missile yesterday. And China's 1.24 trillion sovereign wealth fund vowed to help with risk mitigation and market stabilization in 2024. That's the latest sign of state companies playing a bigger role in helping the ailing stock market in China. All right. All right. Just let me know if you guys can see the live stream. I've got a message here from Wings of Change that he's not seeing or hearing anything. The stream has indeed started. We are sharing. It looks all good on my side, so let me know if anybody else is not seeing or hearing anything. Let's just take a look at the real rate, and we'll just zoom in here. So the real rate is on a 10-year basis. We're looking at the 10-year real rate. Hey Raj, good morning. Can you see and can you hear? Just let me know. All right. On the daily time frame, we've crossed negatively. Okay, we've crossed negatively. The green EMA dropping below the orange EMA. The green's a 5 period. The orange is a 10 period. Hey Mia, good morning to you. Nice to have you on the live stream. All right, and you can see, of course, that the RSI is below 50. Guys, I'm of the opinion that real rates are coming down. Not only real rates. Okay, let me just type for Anna. I'm just typing into Anna. All right. I beg your pardon. All right. Let's take a look at the real rate. What kind of pattern can you guys see here? What kind of pattern can you guys see here in the real rate? Can you see it? Can you guys see it? What kind of pattern is this? Okay, it's a head and shoulders on multiple levels. Let's draw it in like this. Let's draw it in like this. In this way, we use that as the left shoulder. This is the right shoulder. So again, this topping pattern. Okay, we've got this topping pattern. So the idea here is it looks like the real rates are coming down. Why is that important? Why is it important for us to know which way the real rates are coming down? Because it's a key driver of the markets, right? It's a key driver of the markets. Typically, what happens is when the real rates come down, it tends to bring the US dollar with it. Well, if the US dollar is moving down, then we'll probably see some support for the other majors. We'll probably see some support for the euro, probably see some support for cable, Aussie, Loonie, etc. It's a little simplistic. It's a little simplistic what we are saying here, but the idea, and the reason it's simplistic because the Fed doesn't work in isolation. We've got the ECB, the Bank of England, the Bank of Canada, the Reserve Bank of Australia. These all going to interact with one another. But by and large, the key driver at the moment that's been pushing markets has been the US rates. Okay, and the fact that the US rates here are coming down is something that we definitely have to keep on top of. Now, what we can do here is just label. Let's put in our labels. Let's put in left shoulder here. Okay, so we'll put in left shoulder right here. Let's put in our head over here. Okay, we'll put in our head. Hey, Anna, okay, great, Anna, brilliant. Nice to have you back. Okay, so we've got left shoulder, head, okay, and here's the right shoulder. Now, this is a second head and shoulders. The first head and shoulders was over here, left shoulder, head, right shoulder. We spotted that one. And we said the real rates are coming down, right? Now we see something broader. So I'm of the opinion that we will see lower rates as 2024 progresses. And the first rates, actually, the market is pricing the first rate in March. Okay, so what's the big deal about here? What's the big deal about this? Is the big deal that it's a driver. It drives the currency market. Well, guess it's going to drive the stock markets as well. It's going to drive the risk markets as well. Why is it going to drive the risk markets? Because we have a calculation in finance. It's called the time value of money, and interest rates are an integral part of that calculation. And as interest rates come down, the present value. So as interest rates come down, the present value shoots up, and that tends to help support the stock markets. Something else for us to take note of is that the real rates are not the only driver. They are, in my opinion, a key driver, but we've gone into earnings season as well. And I think that it's important for us to keep our ears to the ground. What is the story regarding artificial intelligence? Last year, AI, artificial intelligence, also helped boost the Magnificent Seven. Right, so we just want to see if that's going to help as well. Right, let's just put in the US dollar underneath this. Okay, so we'll go plus US dollar, and we'll just put it underneath. Okay, take a look here. Let's take out the RSR. Let's take out the drawings. Okay, you've seen the head and shoulders. You've seen the head and shoulders on the real rate. Well, if the head and shoulders plays out, okay, then we can potentially have a pattern that looks like this. We potentially see the dollar move up when the when the real rates move up, and it tends to move down when the real rates move down, right? So here's the real rate coming down. Hey, guess what? Here is the US dollar moving down. And then what we have is this interplay on the right shoulder. Okay, we've got this interplay on the right shoulder. So the right shoulder is a bump. It's a bump up. So the US dollar is bumped up with the right shoulder. Okay, but if the pattern completes on the real rate, if we get that head and shoulders completing on the real rate, then we probably see the US dollar get pulled down as well. Let's just do an analysis on the US dollar top down and see where and if there are any key levels that we can keep our eye on. So let's bring up the US dollar weekly chart, and let's work from that. Okay, so you guys now should be seeing the US dollar in front of you. This is a weekly US dollar. The black moving average, that's a 30-week exponential moving average. It comes from Stan Weinstein's book, How to Profit in a Bull and a Bear Market. You can see that we are below that 30-week exponential moving average, a 30-week exponential moving average pointing down, but we're pulling back to it. So now the idea is, are we going to see the 30-week exponential moving average act as resistance? I don't know if it's going to, but if the head and shoulders plays out, then I think it does act as resistance. The question is, of course, do we get a bounce to the downside? Now, if we get a dip to the downside, not a bounce, a dip to the downside on the US dollar, then we probably see support for the other majors, right? Then we probably see support for the other majors. The RSI remaining under 50. Let's go through to the daily chart here and do a analysis using our zones. Okay, so let's just bring up the US dollar daily chart. And this is interesting. I am looking at resistance here. Now, there is no doubt that on a sort of macro level, I'm just going to go rate. On a macro level, you can see today the real rate is pushing up. So there is probably a risk-off day today. Well, if there's a risk-off day today, we probably see money pushing dollar up today. But I think that given the broader pattern and the broader feel that real rates probably coming down this year, unless we get different fundamental data, then I think that we've got to look at the resistance levels. If we've got this resistance level over here, okay, then we should, it's almost like a double top. Here's the left, here's the right. Well, if that's the case, we would need some sort of timing, and the timing we look at is on the hourly chart. So let's just go look at the hourly chart and see if there is any potential resistance levels that are coming that we've got to keep our eye on. Okay, so let's go US dollar hourly chart. All right, let me get the camera out the way. Let's put the camera here. Okay, so I think the resistance area that we looked at yesterday was round about here, perhaps a little lower, but it's pushed up. Okay, it's pushed up here. I think that we've got to see if the EMAs roll over, if we get a crossover of the green EMA crossing down, crossing below that orange EMA. It's a 5-hour, that's the green, and a 10-hour, that's the orange. There is some danger here in terms of the stochastic. Where's the stochastic? Well, the stochastic is in the upper limits. That's stochastic's momentum, right? So when the stochastic is in that the upper limits, it's telling you that the momentum's to the upside. So if resistance is going to dominate here, then what we're going to do is we're going to have to see the stochastic give up its upper limit and start coming down. So if we can get a movement down in the stochastic, and if we get the EMAs crossing to the downside, well, that would potentially be the head and shoulders coming into play. It's potentially the head and shoulder of the left shoulder, head, right shoulder of the real rate. Okay. Bollinger's widening. Yeah. So I'm just sharing that tab, Anna. All right. So Anna's saying, look, the Bollingers are widening here. Okay. Yes. So the concern here, Anna, is if you go down to the hourly again, if you go down to the hourly, all right, you can see that the stochastic is in the upper limits. Well, if it's in the upper limits, okay, and the Bollingers are widening, there could be some sort of support for the US dollar. And I think there is some support for the US dollar in the very near term because I think we're having a risk off day today. We're having a risk off. We've got conflict in the Red Sea area. There was a real sell down in the Asian, specifically the Chinese markets this morning. Perhaps some money moving towards that. But again, we're trying to get big picture here. What we're trying to do is we're trying to position ourselves big picture. We're trying to get ourselves ready for when the move lower in that real rate comes. I can't guarantee it, of course. Nothing's a certainty in this game. But the idea is that if a head and shoulders plays out in the real rate, one would think theoretically that it should bring the US dollar down with it. So we take a look at the key levels for reaction. So yeah, absolutely. In the near term, there does seem to be some risk off, but I think that clears up eventually. And when that clears up, we want to try and exploit it, right? We want to try and exploit it. Does that make sense? All right. Yesterday, let's just take a look at DAX, because DAX yesterday was not a surprise. We saw the EMAs rolling over yesterday. So the EMAs rolled over here. Okay, and what happened is that the stochastic subsequently fell out of the upper limit. Well, if it fell out of the upper limit, that's and we got that negative crossover in the EMAs, that's going to bode well. Where it's interesting is when you do take a look at the daily chart, and we just consider the Bollingers there. Okay, so I'm just going to bring up the daily chart for the DAX. And what's happening here is it's dropped into the lower zone. That's what we call zone 3. That's between the lower blue and the lower red. You can see that the RSI is dipping here. So there's definitely some negativity that is coming in on the DAX side. What I would suspect, though, is that if we start seeing the interest rates come down, and if we do get some good forward guidance in just general earnings, there may be some sort of opportunity here in terms of possibly a fake out. In other words, we've dropped into zone 3. Is that a fake out? And if it expands, does it go back into zone 1? For that to happen, I think that head and shoulders in the real rate has to play out. If it doesn't play out, of course, and we get some expansion to the downside, not great. Yesterday, of course, there was some bad economic data in terms of growth coming out of Germany. I think that played a hand there. But if we take a look at the weekly chart for the DAX, it hasn't capitulated as of yet. Okay, hasn't capitulated. So this is the weekly chart. You've got the DAX over the 30-week exponential moving average, and the 30-week exponential moving average is pointing up, and you've got the RSI above 50. So there does look to be some sort of moderation taking place here in terms of volatility. Look how tight that volatility is over the last, this must be the last 6-7 weeks. A little bit of a drop down now. If we start seeing that ECB talk coming through with, yes, we will get interest rate declines. Remember that time value of money equation, potentially some sort of support coming in. So let's just keep an eye on the support levels here, see if there's a head fake or a fake out here. And if there's a head fake or a fake out here, do we get back into zone one? Okay. Raj suggesting perhaps a flag pattern here. Possibly. I think that if this does turn out to be a consolidation, we can certainly look to this as some sort of flag pattern. Maybe even some sort of, yeah, I think a flag pattern's probably. But again, Raj, let's see if we get that breakout to the top side. If we do get that, fake out, okay. Another instrument just to take a look at is gold. So I want to go back to that real rate. Okay, I want to go back to that real rate. Gold is something that we've mentioned in the past. All right, and what we'll do is we'll just change the US dollar at the bottom. Let's put in XAU USD. Okay, so let's go ahead and change the input here. Just put in XAU USD. We'll use the FXCM. We'll use the FXCM instrument. Okay. And generally what happens is when the real interest rates move up, you kind of see gold shifting down. When the interest rate comes down, you start seeing gold being supported. So, okay, if we see the head and shoulders complete, okay, if we see this head and shoulders complete and there is a breakdown, okay, if there is a breakdown, so we get something like this, and this inverse relationship holds, potentially higher gold prices ahead, okay, potentially higher gold prices ahead. So the key that we've got to be looking at as 2024 unfolds is the data that comes out that affects the real rate. If the real rate continues to move lower, I think we've got a tailwind behind us. If we see economic news come out and the economic news actually starts putting a brake on the interest rate cuts, then we've got a problem. Why do we have a problem? We have a problem because that is the antithesis of what the market's currently pricing in. Okay, so let's just summarize or reiterate what we've talked about this morning. Large head and shoulders pattern suggesting lower rates. Rates are key driver. Yes, on the near term, the short term, there is potentially a risk off movement, but I think that could be setting up for when the larger pattern starts unfolding. And when that larger pattern starts unfolding, the correlations I think are going to tend closer together. So we'll keep an eye on that for the moment. Just keep in the sort of forefront of your mind that we're doing top-down analysis. What we're trying to do is we're trying to see the greater picture, the larger picture, the bird's eye view, and then setting up for potential exploitation when we get levels that are acting in favor of the larger scenario. Okay, that's as far as we're going to go this morning. If there are any questions, just go ahead and type those into the live chat. If there's any questions, just go ahead and type those into the live chat. I'll just wait a few seconds. Otherwise, we shall conclude our webinar. No, there's no crypto minute and a no crypto minute tomorrow. We're just going to just going to be working on our morning market review. All right, any other questions? All right, guys, let's wrap up here. Thank you very much for joining me this morning. Much appreciated. Have a great day ahead. Chat to you tomorrow.